Good morning, crypto enthusiast. Welcome to the Leap Podcast, your source for cryptocurrency updates with Leap Digital Investments. It's Monday, 10th of November, 2025. I'm Patrick Penn. The market had entered extreme fear with the Fear and Greed Index at 20, triggering retail capitulation while institutions accumulate 30,000 plus BTC in a single week. This is not distribution. It is a reflexive loop of loss aversion overriding base rates. In other words, the fear of losing $100 is more intense than gaining the same amount. Let's dissect the data, clear, concise, and unemotional. Let's leap in. Bitcoin at 104,000 US dollars is recovering from a 7-month low below 100,000, with a death cross confirmed as the 50-day moving average slips below the 200-day. Last week delivered the worst monthly performance since February at minus 0.03%, underperforming SPX and Nasdaq despite ETF inflows earlier in 2025. Early Bitcoin adopters have sold relentlessly throughout the year, while 1.15 billion in ETF outflows, led by BlackRock and ARK, marked 6 consecutive negative days totaling 19,000 BTC sold. Long-term holders offloaded 400,000 BTC amid the chaos. The counter signal: institutional conviction divergence accelerates. JPMorgan increased its BTC ETF holdings by 64% to 5.28 million shares, $343 million US dollars, during the decline, forecasting a $170,000 price target for Bitcoin. Wales bought 30,000 BTC worth $3 billion in 1 week, reversing 6 days of outflows. Trump Media now holds 1.3 billion in BTC, with Michael Saylor signaling an imminent purchase. Institutional custody hits 100 billion via Ledger. Banks enable direct BTC buys, and Putin declares nobody can ban Bitcoin. Support zone for BTC, 100,000 to 102,000. A weekly close above the 50-week moving average would invalidate the breakdown. Pain is purging. Accumulation is progress. Ethereum at 3,500, stabilizing after 507.83 million in weekly ETF outflows, the third largest on record. The counter signal: infrastructure catalyst lock-in. Stablecoin supply hits a record 188.8 billion, adding 84.9 billion over the past 12 months, more than all other chains combined. Critical level: 3,500. Hold it and 4,000 enters the frame. Breach it and 3,200 test conviction. Short-term pain is price. Long-term demand is structural. Solana at $165, leading performance with unmatched momentum. The Bitwise SOL Staking ETF amassed 500 million in its debut week, ranking top 20 among 920 new ETFs in 2025. Weekly inflows hit 136.6 million, while BTC and ETH bled capital, marking 0 negative flow days since launch. Pantera Capital placed a $500 million bet with a $2,000 price target for SOL. 2 of the top 3 largest crypto funds hold SOL as their largest position. SOL volume now surpasses Ethereum. Technically, SOL demonstrates relative resilience amid sector fragility, with ETF inflows confirming capital reallocation. Support is at $160, resistance $180. A decisive break targets 200 plus. Institutional momentum is not rotation, it is dominance. ETF flow divergence tells the allocation story. In summary, ETF redemptions are increasingly seen as retail exit liquidity. Volatility remains elevated, but the compounding catalyst, institutional participation, protocol upgrades, and on-chain transaction volume continues to build momentum, even as sentiment-driven selling persists. That concludes the 10th of November 2025 update. For more information, see the description on Spotify or YouTube. Stay disciplined, stay ahead. Thank you for joining the Leap Podcast.